Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin, this wonderful, wonderful situation going on right here, unfolding before our eyes. We are starting to see a lot of volume at the 28,900, 28.8 mark, which is a common support and resistance level. So if we can hold this area, we'll probably be just fine. If not, we may be breaking down a little bit lower to that 28.5, lower 28,000 range. We're going to talk about support and resistance levels here today, kind of see what's going on. So if you are new to the channel, I appreciate you watching. Thanks again so much for your support. Also, that goes to everyone who's been watching me for years too. Greatly appreciate you as well. Really quick, we want to start with some open with some good stuff here because yes, it's an obviously ugly, really ugly red market here today. I think one of my other subscribers on Twitter mentioned something about a moron market. Yeah, it's pretty much exactly it right now because it's a lot of alts are getting hit pretty hard, right? So careful trading alts. We have some swing trades with some pretty open positions there. Took some healthy profits as well, and that's what I did want to focus on just at least for a minute. Okay, not long at all. Just kind of bring to your attention some awesome stuff here. So obviously we had some unusual activity yesterday there where about $250,000 was transferred and Bitcoin went up a couple $100. No big deal there, but we were able to take some profits from Bake. I don't know if you've seen that coin at all, but we got some profits there. 12 hours, 30%. It's a 5x leverage trade. We're not going too crazy on our trades here. This is 5x as well for API 3. We took 84% in 8 hours. So some really cool alts were popping off this weekend. We were able to catch a majority of them. But again, congrats to our community members for that. That's really awesome. I'm happy that we were able to get some wins here for you. So speaking of wins, as far as what's concerned right now, is this a winning situation for Bitcoin? Can it recover? Truth is, it's looking pretty bearish, but once again, we want to look at some bigger picture stuff. There is some interesting high block capital stuff we want to look at as well on the back end too. So stick around through the end. I think it's going to be important you recognize some bigger picture stuff. Speaking of bigger picture too, we want to kind of take a look at this here first. Let's go ahead and jump right into traditional markets and or just say dollar index. Dollar index is still declining, and keep in mind that this isn't a 100% relevancy. In fact, over the last couple of years, it's kind of decreased in similarity, but oftentimes when the dollar index goes down, Bitcoin price will go up. Right now, dollar index is still on the increase in the overall sense of things, and Bitcoin is still on the decrease as well. So it's holding somewhat true, but not 100%. But just know right now, dollar index is trying to figure out if it wants to go up or down here today, or wants to continue to descend on this trend. We look at traditional markets as well. They were dropping over the weekend correction, not over the weekend, but leading into the weekend. And of course, here today opened sort of strong, but not that much, just 0.5% for S&P. So all in all, nothing crazy there, like just standard stuff there. This is where things can get a little interesting here, where Bitcoin dominance is starting to decrease. Or correction, not dominance, rather. We're looking at, this is the dominance here. Bitcoin dominance is pretty much plateauing after initial decrease here, pretty significant back in the 13th of July. Okay, so if you remember that was a very red day for us. Bitcoin dominance dropped pretty significant. Ever since then, it's kind of been treading sideways. And same thing with altcoins as well, pretty much the same. So for lack of better terms, the term I like to use for this is stuck on stupid, or some folks say moron market. There's a lot of ways you can describe this with some quick little words, but generally speaking, it's a whole lot of boring ridiculousness, if you will. Okay, now in order to make sense of it, we want to look at a few things. So let's go ahead and see if there was any kind of gaps that we might have left off over the weekend here. So we can kind of look at this here, Friday through Sunday. No gaps there. Friday to Sunday, right here is where the price opened and closed. So basically, this weekend was so boring that the price didn't gap up or down. It just opened and closed at the same exact place. Okay, so that's what kind of market we're in right now. Unfortunately, it is dropping right now, but on the same accord, nothing to worry about there as far as gaps getting filled, because there was really no gap in the first place. All right, so again, just kind of some big picture stuff there. We also want to look at, let's go ahead and start with the monthly here, just get perspective here so far where we're at. Monthly isn't terrible at this point. I've talked about this previously. We're still maintaining above key level supports. Our MACD is converging. It hasn't fully converged, but it's almost there. So it does tell us that we have some momentum where the shift in momentum should swing upwards here soon. So again, the monthly isn't in a bad shape whatsoever. We're above some key level supports as well, and it's important to recognize that. Okay, so monthly, I think, is in decent shape. Weekly is kind of treading water here, right? And we see here right there the 20-day set moving average on the weekly chart 28,600 is the key level support there. We almost wicked down there today, what we wicked down there last week, and effectively we're seeing this support range being formed at that level. Once again, 28,300 based on Fibonacci is another support level, so 28.3, 28.5, these are some key levels that we need to recognize leading into this if the price were to continue lower. Doesn't mean we're not going to see some candle wicks lower than that, because once again, some aggressive price action is forming, and this could very well, we could see a test of that 27,000 range. I'm not a subscriber to that. I do really think that low 28s is probably the lowest we're going to go. The main reason why I feel that is because our most recent highs are going to work as most recent lows. Okay, so oftentimes in these kind of trends, you'll see previous highs work as current support levels, and I'm a firm believer there that I think the 0.5 Fibonacci 28,300 should be the immediate bottom. Again, if we come that low. We may not come that low. We are seeing a lot of support at 28.8. Okay? So again, weekly also not terrible. It's more so, I would say, neutral, even though we are diverging on the MACD here. We got a stronger convergence on the monthly, and of course some better moving averages to help us out there. Just some things to kind of think about there. So that's kind of the preface there. Let's go ahead and start with some high vol capital data and work our way down on the charts. When we look at the daily here, this is basically the daily time frame, we can see and identify that there's a lot of liquidation levels here at 28,500. Keep in mind, these aren't prices getting liquidated. These are prices opening and closing consistently. And in other words, we see a lot more opens here recently where their stop losses are at 27,600. So majority of the market, or some of the market, feels that 27,600 upwards of 28,000 is a good range to have their stop loss, because the likelihood of the price action going that low is fairly low. Okay? Again, stranger things can happen. I wouldn't be surprised if we see a candle wick exactly to those levels. But once again, leading into it, those are safer places that the market is believing to have their stop losses located. Inverse as well, right there at about 29.9 is a pretty heavy area there where a majority of shorts are hedging their shorts with some stop losses at that level. Okay? Again, keep in mind, we break through 30,000, we'll see a short squeeze likelihood, and the price will probably continue further from there with those shorts hedging their shorts with some longs. That said, we see whales, of course, controlling the market. Big surprise. I wonder what's going on there. And then if we take a look at the longs here, we can see more longs are being opened today than yesterday, which is interesting because we're also seeing more shorts being opened today than yesterday as well. Well, again, it's not that interesting, honestly, because yesterday was a Sunday, and in truth, you get a lot of, we saw the market pretty much went straight sideways, minus a little bit of an increase and decrease here and there. The bottom line here is that today we see more shorts than longs being opened, and that makes sense. That is with good reason, because we just lost that 29,000 range. Taking a look here at the longs, we can see there's probably some early, I wouldn't say those are early longs, but we got some longs here at about 29,000 even. That is a sensible area to have a long position. We got some late longs here that just opened up in the last hour or so at 28.8. So longs are trying to start, getting heavy around 29,000/28.8. If we see on net shorts, we can see here that we've got majority of shorts, a heavy amount of positions at 29,100 that opened, or those formed over the weekend, and then some more recent / late shorts at 28.9. So right now the shorts are holding strong. They're doing fairly well for themselves. If we take a look here at the 1 minute, the price action is trying to consolidate this area. We're starting to get a lot of larger volume wicks here. But what's good though, and this is typically a positive sign, is when you see a large volume wick and then the price action closes with a bullish engulfing candle shortly after with additional volume, it tells us the bears are starting to lose a little bit of steam. Again, this is really too early to tell. Doesn't matter too much, but something to note. All right, so take a look at the daily and wrap this up here for us. So what's the standard stuff telling us here? Well, we've looked at this before, and with our simple moving averages, we are below the 20 and the 50. We've known this for a little while. Basically tells us, this bearish divergence is likely to continue for a little while until we bounce off some key level supports. Once again, 28,300 is a key level support. So is 28.5 or 28.6 right there on the weekly moving averages. We got the ascending trend here still working its way up. We got the 200-day SMA also holding strong as well. So those things are very beneficial here. While the 200-day SMA is at 26,900 and it's still a little ways away, I don't think we're going to see that tested for some time. But the key is that we're on the right side of the tracks there, and that's a beneficial situation. If we break below the 200, we'll have a different conversation altogether. but that is a support level that traditionally will hold and do well for us on the daily. Taking a look at the MACD, we don't really have much going on here. We're still diverging bearishly. We are starting to pick up some momentum here on the oscillator, kind of telling us that if today we close underneath 29,000, there's a solid chance we might actually see the price action continue lower. Once again, that does happen, but what's also important to recognize is, that the manipulation of the market, they get you to kind of shift this bearish mentality. Then you attach yourself to the fact that the price is going down. In turn, they'll turn itself around and shoot the price right back up. It's kind of a liquidity swing, and we're going to look at some liquidity as well here and kind of see where that's at. In fact, why don't we take a quick peek here right now? A lot of liquidity, of course, upwards of 30,800 to 31,500. Okay. Big surprise there. We got some liquidity here as well, down at 25,000. I don't think we're going to see that tested, but the bottom line here is that we do have some fair value in the range here of about 27,000 upwards of about 28.2. Okay, so again, a lot of value here that could get snagged up. You got to keep in mind, previous resistance could be the new support, and I think the likelihood of 28.3 holding is fairly high. If we do lose that, a wick down to low 27,000 range would make sense considering the fact that there's tons of liquidity. So if you want to kind of just randomly gamble on putting a stop, not a stop, a limit order at the low to mid 27,000 range, there's a decent chance you may get filled. There's also a decent chance it will never happen. But again, that would be a really nice way to average your price down for a spot trade, okay? Just something to think about. Either way you look at it here, we're moving bearishly here. Stochastic RSI is telling us we are swinging downward still. We lost 50 on the RSI, but money flow index is increasing. Interestingly enough, we're getting more money into the market in the last 14 days than we have previous, but yet the price is going down. That tells us we're building a solid, more stable foundation at this level, and likelihood of bounce is higher as well. Okay, so again, money flow index, volume, those are all things that speak very loud. We need to make sure to listen. But if we take a look at just kind of the more recent past, this is back upwards of about May, June, July. So of May, June, July, and a little bit of August, we see the most amount of volume at 28.8, second most amount of volume at 29.2, and of course 30,200. So you got this volume range here, but you got to keep in mind, not a lot of volume here in this area. So it would make sense for the price to continue to average itself out sideways in this area and down, just based on that sentiment. We can also see we're starting to descend as well on a trend here, and we'll pay attention to that to kind of see what's going on there. Actually, I prefer to use this here. Let's go ahead and move this out and just pay attention to that later. All right, so when it comes to the 4-hour time frame, what we want to look at is a few things here. First of all, got a lot of volume, obviously at 29,100, 200. We saw that over the weekend. When it comes to the 4-hour, though, I like to look at some type of bearish and bullish continuation. With this here, we can see we have broken descendingly here with a MACD divergence. Now, this isn't super impactful, but this does tell us that we've seen a shift in momentum. Okay. Now, again, that momentum wasn't very strong throughout the weekend, so it's really nothing to really overread. But the bottom line here is we've been under 50 on the RSI for some time, and it's important to recognize that the price action will probably continue lower until it doesn't. I think 28,800 will hold as a support level. We can see this previous area here held, and again here as well. Keep in mind this was last Monday. This wasn't the weekend. This was last Monday. Okay, so we pretty much saw the exact same behavior last Monday, where the price action shot up pretty hard to about 30,000. Would be nice to see that again. I wouldn't get your hopes up though. But potential reality for the price to recover from here. We'll see what's happened. So taking a look at the 1 hour, last thing we want to wrap up here with is Ichimoku Cloud. And again, we've been range bound for some time, so this doesn't tell us much. I wouldn't trust this indicator at the moment because we are just going straight sideways, and this doesn't matter too much to me at this point. TD sequential as well. In truth, there's not a lot to really note except for more so the macro behavior we're seeing right now. So in summary, we can understand that the overall sense of the weekly and the monthly is decent. Okay, we've got a decent amount of support at the 28,500, 28,300 range. We lose that support, we could see a fair value gap, candle wick down to 27,000, low 27.1, but I think we're a little ways from that. Just be mindful that could potentially happen, especially if the price gets closer to the low 28,000 range. Between now and then, I would expect 28,800 to potentially hold, but the best thing to do right now is to not really trade. Unless you're honestly shorting some altcoins right now, you're probably best hanging out on the sidelines and waiting for a good opportunity. to me, waiting is the best strategy at this moment. And I think that we're in a position right now where alts are suffering, and it's important to, if you're going to dollar cost average, obviously do so sparingly. But I would just say wait for better opportunities. And again, this happens all the time. When I say to wait for better opportunity, the price will shoot right back up. If that happens, you're going to miss opportunities. But you got to recognize too, if it does come down, you'll be happy that you waited. And if it doesn't, we'll find better opportunities later. The market is literally full of missed opportunities. So I hope you do miss some opportunity here to have a bad trade, and you find a good one if you're to wait. Best of luck to you. I hope that works out well. If you want to become a better trader, again, cryptocash.tech is a site. Link down below. You can join us with some of our awesome and healthy trades here with some nice swing trades. And I hope you all the best. We'll look forward to seeing you in the next video. Hope you have a great rest of your day. Thanks again so much for your time. Take care.